What is up, YouTube? Welcome back to Stacks by the Numbers, and today I'm jumping into the defensive sector, which means regardless of what the economy is doing, this company will continue to earn its revenue, conduct its business, right? People need their products and services. That's what a defensive stock is, not to be confused with defense stocks, which are basically military industrial stocks like your Lockheed Martins and your Raytheons, right? So today we're diving into one of my favorite companies that I always keep on my watch list, Philip Morris International, ticker symbol PM, listed here on the New York Stock Exchange. As you can see, slightly green day, up a little less than 1%, excuse me, sitting here a little over 100.5 on the day. We have a market cap of almost 156 billion, PE sub 18, which in my opinion is attractive. Dividend yield north of 5%. Very nice. And the reason why a company like this, just quick background, tobacco company, products in over 180 companies, right? Marlboro brand, around since 1847, right? So if you switch over here first quarterly, you can see this company. Look at the revenue, 812 billion, very healthy net income off of that. 8.1 drops to 7 3/4, small climb to 7.8, back up to 8 billion. Right, so this is what I'm saying. It's that consistency. Now, switching over annual, you can see 28 3/4, north of 29.5, almost 30. Shit hit the fan. Last year, almost 31.5 billion. And look at the net income off that, 9.1 billion. See, this is the difference between a good company, Philip Morris, and a crap overinflated company that is not worth your time, in my opinion, like Airbnb. Right? Imagine making $6 billion last year as Airbnb, but not making any money. And now you have a company like Philip Morris saying, yeah, no, we're making $30 billion a year, and we're bringing in like 25-30% of that as straight profit. I mean, you can't knock that. You really can't, right? So as we can see, consistency, right? Very, very big. Paying you a healthy dividend to own it, huge. We pull up a 5-year chart. As you can see, look, you're down technically 4% if you bought it this high. But also at the same time, you're being paid to own it the whole time, and if you do the drip with the dividends, you're in an even better position. This is why there are people who specifically look for compound investments. And this is what I'm saying. By the way, the drip, if you don't know what the drip is, see, when you buy shares of a company that pays a dividend, you have two options. You can either A, just get the money. I invest 100 grand into PM, you pay me 5%, you give me 5 grand. Or you can DRIP, which stands for Dividend Reinvestment Program, and you can reinvest those dividend payments into more shares of Philip Morris. And then the next time you get a dividend, you're going to get an even bigger payment because now you have more shares than you did originally, and so on and so forth. Boom. And this is why, is it slow? Is it boring? Absolutely. If you have good income now from your job, career, business, side hustle, whatever you're doing, if you have good income now and you can afford to invest into companies like this and tuck them away for 5, 10, even 20 years, yeah, it's boring. You're not going to be a millionaire tomorrow, but it might really, really pay off for you down the road. It really, really can. Right? You look at companies like PM, even Verizon. I know I used to talk about it a lot. It took a really big hit recently, but I used to like that stock when it was around like the low 50s level. I felt it was still undervalued. Now they beat it up. It's down at like 37 and change, paying you a healthy dividend to own it. And it's like, yeah, it might bounce around for a little bit, but you're buying a brand name company that chances are isn't going anywhere, and they're paying you healthily to own it. Just compound that year over year, man. I'm telling you. So, last year, 31.5 billion, market cap 156 billion. So what? That's like 5 times total revenue, right? So that's like in line, right? That's what I say anyway, in my opinion. In the private sector, companies worth roughly 2.5 times yearly revenue. In the public sector, you want to bump it up to like a 4 or 5 times multiple. All right, fine, no problem. This stock right now sitting at about a 5 times multiple. Switch over here to TradingView. This is a 1-month chart, I believe. Now it's a 1-month chart. And again, technical analysis, not really my strong suit. I am man enough to admit that. I'm much, much better with numbers than charts. But also at the same time, you could potentially say that we have a little bit of a descending wedge going on here. And also, just keep a heads up here. You could have a double shoulder with your head leading to a potential pullback here. So, this is why. Oh no, wait, I'm sorry. You would have it go up. Actually, my apologies. So, this is why I know a lot of people use technical indicators for short-term trading, and as you can tell, not an expert on technical analysis. I know a couple of patterns. I know a couple of things to look out for. But again, if I'm sure my original long-term analysis of PM seems like a more solid, suitable decision as opposed to trying to play a pattern, right? But then again, it really does all depend on how much money you have and how much you can risk. If you have a couple of bucks that you really don't care if you lose, then yeah, buy a couple of calls, buy a couple of puts, try to do, some short-term trading. If money is tight and you're just looking to park it away like into a stable company, then these are the type of companies you want to look for. And it breaks my heart because I know a lot of people have had a lot of bad luck in the market, and I used to come to people with phenomenal stock investments, man, and they would be so hesitant, and like the main objective you would hear is, it just can't go down. Like I can't lose what I put in. And believe me, it's a really rough situation to be in. But again, if you're younger and you have time, if you have a couple of years, you can slowly piece into a company like this. Then they pay you to own it, so those dividends will accumulate more shares for you, and so on and so forth. This is what I'm saying. This is why, again, it might be slow, tedious, and boring, but even if you're a younger investor, hell, even if you're 50 years old and you got some extra cash, park it into a company like this. I'm telling you, you're going to turn around in your 60s and you're going to be like, holy crap, this position is now, a sizable position. I'm holding X amount of shares, getting a healthy dividend every year. This is what separates the men from the boys, so to speak. Now we switch over here to stock charts. And I got my Bollinger Bands, my 50 and 200 day moving averages. As you can see, stock's chilling right here at about 100.5. We have a rising MACD. It might curl and plateau right there. RSI, low 58. Again, RSI, if it's sub 30, people look at that as an indicator that a stock is oversold. And usually the benchmark is around 70. If it gets there, people feel that it is overbought. So as you can see, kind of like mid-range right there, right? But the daily caught my eye because if we switch over here to the daily, first of all, we have our Bollinger Bands tightening after widening drastically on a big drop here going into October. The MACD is pulling back, but we have our 50 and 200 day moving average like converging here at this 94 level. So in my opinion, that might be your downside, right? This bottom Bollinger Band might hold, so your downside might only be like 4%. But if it does pull back to 94, now your downside is 6%, right? So in the short term, again, I know it might suck, but if you liked it at 100 and change, you can add to the position at the low mid-90s. And again, you're not necessarily down that much because they're paying you 5% to own it. But the main thing I want to show you is the way it has been trying to fight and bounce off of this mid-Bollinger Band level right now, sitting at 99.81. In my opinion, that's a very, very good sign. So you could potentially see a little bit of a pop back up. Maybe it'll form like a double top here at this level, but it might get back up to 102 and change, possibly 103 in the next couple of days. And that's basically it. I don't feel like talking anymore. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm. Helps me get more eyes on the channel. If you like the videos, push the subscribe button. Grow the community means a lot to me. But most importantly, I understand. Markets take a big dip today. Boom, we have a pop 500 points on the Dow. So I just want you all to stay sharp. I wish everyone success. I hope everyone makes a couple of dollars. And I'll see you guys in the next video. Have a good day, guys.